Listen, I just want to start off with you, Alexander, because of everything that's happening in Ukraine, what we were talking about there in the break, because this situation is such a dire, such a sad one, to be frank. I'm really quite curious. You talk to us what day-to-day life is like. I interviewed Alexander Chobani not long ago. He's the founder of the largest crypto exchange in Ukraine. And just talking about getting business done there. So we know what day-to-day life is like. Most students, younger kids, still doing remote learning, as I understand it. You can't send kids to school. How do you conduct business in a situation like that? How do you conduct day-to-day affairs when you might be taking a conference call and there's a missile going by you? Literally, I know somebody in Ukraine that happened to while doing a conference call with Amazon.
Well, since yesterday, as I mentioned before, it was pretty calm in Kiev. Maybe you heard that even Vitalik Buterin, co-founder of Ethereum, he came to Kiev a couple weeks ago.
Yep.
There was an event, and if you usually want to conduct an event, you're doing it in a bomb shelter or a very protected environment, because you don't know like what's going to happen next hour. Well, fortunately, when Vitalik Buterin was in Kiev, nothing happened. So we gathered a couple hundred people. There was a pretty nice event. Even in times of war, we were able to conduct a technological conference in Kiev. So
I mean, that part's been amazing to me, that in some ways it's business as not so usual, but business continues. And I think a lot of people maybe didn't realize the incredible engineering brain power of Ukraine.
Indeed. And Kiev, Lviv, and some other Western cities, they're relatively safe for people, and all the online business still going like it was before. I mean, in the COVID times. So it's basically like you're in COVID. You still, but you don't wear masks anymore.
Yeah.
But you still have to be very cautious when you go in somewhere, and you don't need to get too many people together. So this is not good practice. If you just follow this, and of course you have to listen to announcements, because we have announcement like 1 hour before the rocket or some strike could happen. So if you hear this announcement, you have to go to shelter and wait until it's finished. And and it's kind of terrifying, because if you're in the city, you hear this sirens. Sometimes it's really loud. It reminds you like when you saw movies of the World War II. If you want to just feel like it, like imagine you're looking on a movie and you see this and you hear this sound. So this is what our daily life look like.
And lastly, I don't want to make the whole panel about this, but it's quite an important topic. When I spoke to Michael Chobanian, founder of Kuna, the largest crypto exchange in Ukraine, I mean, he had facilitated tens of millions of dollars worth of payments via crypto donations, fundraising via crypto to help the Ukrainian government. How is that playing out? How are those funds being used, and is that still a major source of financing?
Well, Julie actually just barely touched this topic on her presentation 15-20 minutes ago. Maybe just to summarize, we managed to raise over $60 million. We spent around 57 so far, and we have a website called donate.thedigital.gov.ua, where you can see the whole report or when money went to. But the majority of money we started from buying bulletproof vests, then like helmets, then food rations, then some drugs, medical appliance, and so to summarize, it's went to help our military and humanitarian needs.
Let's expand this discussion a bit further, because on the panel we have people representing TradFi, crypto natives, 2 people in government. So I just want to maybe start at the end of the panel with you, Balsam, and just see, what does crypto represent to you right now, both the opportunities, the challenges, the risks? I think if you push it up,
Sure.
there we go.
All right, so I mean, for us, crypto is
If you
definitely.
can just put it a little
Sorry,
closer to your
yeah,
mouth.
is that better?
Loud
All
as
right.
possible.
So when we're talking about crypto, we're always talking about the
Closer.
utility, the potential that we're able to achieve, and I think it is a huge potential. When we, what he just talked about, the ability to actually raise funds in times where you don't have a lot of certainty within the banking sector, what is available, what is not. And this is just a small, example of where we could use digital currency. And then you add to it things that we still haven't even breached into, which is international trade. We're talking about cross-border transactions, the speed of that happening. I mean, you're not worried about a bank closing. You're not worried about working hours or a trade that would take you 1 to 5 days to complete a transaction. This is something that can happen immediately. And it's very useful when you have a crisis. It is very useful for your day-to-day business. And I think, this is just one example of where digital currencies could go. Of course, a lot of obstacles along the way, but I think we are at the start of it.
It's interesting. I spoke with Haider Rafiq, the chief marketing officer of OKX, just before this, and he talked about really leaning in, seeing this as an opportunity for companies that maybe have the funds still to do it, to get out there and market. We've talked to the founder of FTX, Sam Bankman-Fried, on Rio Vision. I would say that SBF's ideas are also very in line with that right now. There's a lot of opportunity. Of course, you guys are acquiring companies, helping prop some companies up. But I'm curious then, that's the great potential. What do you see as the biggest risks right now? What are those challenges?
Well, I mean, I wouldn't call it a risk because, again, it's still something that is developing. But you're going to see some obstacles that start coming when you're doing mass adaptation. And mainly what we're talking about, this is, at the end of the day, a technology. And that is not widely available everywhere. When we talk about cryptocurrency, we're always thinking that we have access to it. People in Europe have access to it. But there's plenty of areas that are not developed enough to use the potential of cryptocurrencies. So the main obstacle is the fact that it is a technology, which is something that, we'll have to develop along the way. But then also there isn't clear regulations, there isn't clear rules. So until now, a lot of sectors are afraid to get into cryptocurrencies because of the lack of regulations. But we're seeing a huge push, whether in the UAE or in other regions, to get that regulated, to get that on the course where bigger institutions can come in, bigger companies can come in. It doesn't stay within the trading, element. It gets a little bit bigger as it becomes a utility to use.
So when you look at something like the establishment of VARA here, I suppose FTX sees that as a positive?
Yeah, I mean, we're honored to be actually the first crypto exchange to be licensed by VARA. But that is exactly what we're talking about, because when we have those guidelines and we can follow them, it not only makes it easier for us because we know what we're doing in terms of the region, but it also protects the consumer because now they have the protection of the local laws, local regulations, and that gives them a little bit more trust to participate in this ecosystem.
Raj, I'm just curious. You're part of MasterCard, a very traditional structure, let's say. They've clearly made a big investment in blockchain. So at a time like this, when the market's down, do you think some of your bosses are thinking, why did we put so much money there?
Not really. You guys hear me?
Yeah.
All right. No, we look at this from a very different perspective, right? So if you look at the number of people who are transacting and the overall market cap and everything, I think it's largely driven by crypto natives and some enthusiasts that are getting into the market. But we run a network with 3.4 billion consumer cards in our network. So we think about how we can responsibly bring some of the innovations that crypto has. The couple that I would always talk about is the buy, sell, hold investment and the NFTs are the first two we opened up in our network. We're about bringing next billion or 2 billion users safely into crypto. And what does it depend on? It depends on two things. They have to trust it. You talked about the trust. And they have to feel it's very simple to do. Consumer experience of doing this, as well as the trust they can place in the on-ramp, in how money comes from a fiat world to a crypto world, and how quickly the money can get out of crypto into fiat world as well. That is very important because people need to feel safe that they can get into an asset class and get out in a safe way for them to even think about putting more in it. So safety, security is everything about it, how we think about it, and we can talk about all the products and services that we have. Most recent one was the Crypto Secure, which we launched last week actually. It delivers scores, risk-based scores, to all the financial institutions in the world about how or what entities they're seeing on the other side of the crypto. What does it do? It brings all the consumers in a safe way into the crypto ecosystem. So that brings billions more people. That's the point of it.
And the biggest risks that you see in this type of market right now, or let's call them challenges that you see in this type of bear market?
It's less about a bear market or bull market. It's more about what are the fundamentals you need to bring more people into the ecosystem, right? So that's why I talk about consumer experiences. So I'll give you a recent example. Until very recently, and I think it's still the case in most wallets, buying an NFT was not an easy experience. A crypto native need to first of all go get a cryptocurrency, get your own self-custody wallet, go connect to a marketplace, and then think about they may not have any other crypto asset in their mind, in their wallet, but they may be interested in a piece of art or a digital music. That's the first thing that they wanted to buy. So the 15 steps they need to get to own a NFT is not a very good consumer experience. So what we did was connected all the NFT marketplaces into card-based networks, so that it's now a simple one-click purchase, you can buy an NFT. It is not a revolutionary by any means. This has been happening in the rest of the world for quite some time, but it's bringing that experience in a safe and secure way to the people. It brings more people into the ecosystem. So that's how we think about it. We think about more about an opportunity. To the extent there is a risk, if you let the parties, the businesses that are in the organized financial sector, traditional financial sector, understand the risk better, they're going to bring more people into it. So it is more about how give them a way to understand the risk is how we think about it, rather than kind of looking at it in a negative way.
Brian, I'm just curious. I'll let you turn on microphone number 7 while I ask the question. The potentials and the risks that you see right now.
So I think one of the challenges for crypto is that it has never really lived up to its potential because of a lack of three things: a use case, an audience, and an infrastructure. So to some extent, as Raj has mentioned, the audience for crypto to a large extent has been a crypto native audience. And these are people who are informed, who have done their research on there, who are trying to use it, who are able to use the infrastructure that's available. But that will always be a minority of all participants. To have a proper audience, you need to be able to go mainstream. And to some extent, that's what Raj is providing, with the ability to ease the customer experience, to make it simpler and easier for your average participant to be able to access the crypto ecosystem. In the use case, I think Alex has just shown a very clear, obvious use case for where crypto shines. The ability to transact across borders in an environment where you may not necessarily have trust on either side of the flow. So use cases such as this, and Balsam had referenced this too, for cross-border trade, is really where I see a lot of potential in the crypto market, particularly among wholesale, particularly among institutional players. But allied to that is the infrastructure, the need, the ability for these players to have the trust to come in mainstream. And some of this will be technical infrastructure, things that Balsam provides by having a marketplace and on-ramp. Others will be a consumer experience like Raj provides. But key to it, ultimately, will be a regulatory infrastructure, a framework that gives people confidence that they will not be taken advantage of, that they will not be rug pulled every time they put their money into a crypto asset. The last thing you want for crypto, and I think this is the single greatest risk for crypto, is a generalized loss of confidence amongst mainstream individuals that they will not be taken care of when they enter this marketplace. In this regard, things such as allowing anonymous rug pulls to happen, allowing allegations of funding of counterterrorism, of nuclear proliferation, etc. These are very damaging to the to the mainstream audience's perceptions of crypto. I think it's essential that there be a means for the industry to help address these concerns, and where they are unable to address the concerns themselves, there be a sound regulatory framework that helps people regain this confidence.
I mean, I think that kind of answers where I wanted to go next, what the biggest challenges are. So is it a lack of regulation or a lack of clarity in some markets? A lot of people talked about there being clarity of what will happen, at least here in Dubai. Is it a lack of clarity from big markets? That's your biggest challenge then?
Well, I mean, let's be clear also that big markets have their own different risk appetites, right? Every regulator has their own risk appetite, has their own context. Everybody wants harmonization. Everybody wants to have a single playbook that you can run on. In practice, that's what we all work towards, but it takes time. Actually, what I think the single biggest risk in terms of regulation is mindset. Being able to transition the mindset of a crypto native firm to understand the mindset of a regulated entity. The single largest fundamental difference, I've said this many times before in public, between a crypto native firm and a regulated firm is the idea of disclaiming liability. And that's inherited from the software industry, and it's understandable. When you have worked on things that are unique to a person, that have relatively low impact, it's natural to say, I disclaim all liability. As the programmer, I'm not liable for what you do with my software. And that's an understandable approach. I'm not sure that that works when it's grandma's life savings that you're talking about. And having the ability to change that mindset, and as Balsam has shown, work with regulators to understand how to protect investors, how to restore trust, I think is particularly important.
I want to jump into some of the actual weeds, use cases that you guys are working on right now. Alexander, the pilots that you're running with the National Bank of Ukraine, can you tell us a little bit about that?
Yeah, sure. So one of the things that we also wanted to do and have real implementation and use cases is to move part of our currency. We started this before the war on blockchain. Basically, create a CBDC with the national bank. So we started piloting a couple blockchains. I think it was Stellar. I think it was Ethereum, and a near protocol. So fortunately in Ukraine, in August this year, the legislation on a sandbox started to be in effect. So we were finally able to produce solutions like that in controlled environment, but not like against the law or something. We're in gray area. So those three now are kind of in process. So we decided to take a use case of paying salaries to government employees. So basically, like we have CBDC, then we send this as a wages, and then people can actually exchange them into fiat using MasterCard cards, for example, or some others. So this is being done. So we want to, in the course of next couple of months, we want to see which blockchain are more suited for that, and National Bank will take some decision, because our president, he clearly said he wants 100% cashless economy, and I think that's the CBDC is one of the cases that could help bring this cashless economy eventually to the economy.
Raj, I'm curious what you're working on. I mean, you and I talked beforehand, and one of the things that interests me was the crypto secure system that MasterCard's working on. What excites you right now in the field of innovation within your sphere?
Yeah, look, we obviously being working at MasterCard, we started with a lot of the card-based products, and that is actually opening up quite a bit of access. Let me just quickly run through kind of things, right? We talked earlier about bringing more people. That is about making our everyday cards usable to buy crypto, which we've enabled. Now, in terms of once they have a crypto account, either at the FTX or with one of the crypto wallets, you need to be able to access it in a simple way. So it is like a prepaid kind of a card setup. We have that everywhere in the world. We have a rewards card. Gemini in US launched a rewards card with us, which is like it's a regular credit card, but you can earn your rewards in crypto. It enables a new set of consumers to get into crypto without actually having to make the investment decision, right? It's about accumulating over time. We also have crypto collateralized cards, right? So you could deposit crypto and borrow against it and access this through a card. Nexo in Europe launched that as well. Those are some of the types of the cards. We're also seeing a lot of demand from crypto native players to be able to pay us in stable coins. We've seen that demand as well. So we've enabled through partners who can pay, we accept through USDC, for example, can settle with MasterCard using a partner through USDC. And then Crypto Secure, is you talked about it earlier. This is again a big building block on an acquisition that we made a few months ago called CipherTrace, where we actually multiple chains, we score every blockchain address, every wallet provider in the world, so that anyone who wants to interact with the chain can understand the risk behind it. We're also starting to...
Who's the target market for that?
Anyone. So for example, in this case, Crypto Secure is a product that we've packaged for our financial institutions, where if they want to understand interacting with a crypto provider, they need to understand whether they're legally incorporated in a jurisdiction. They are doing proper KYC in that jurisdiction. That gives them a lot of confidence in, say, approving a transaction, which is a key building block. It's not something that is easily understood, given the number of new companies that are coming into the crypto space. So next thing is that if some companies want to interact directly with a chain, blockchain address, directly a wallet, you want to understand where the assets came from. Is it came from potentially a sanctioned country? Did it come from an asset that was previously participated in an illegal activity? All of that, knowing that, helps companies take a risk-based approach to dealing with the chains. So that is the product that we repack, made it available for our issuers last week.
I'm just curious, and you wouldn't normally ask somebody this question, but I think in this type of space it helps understand. I'm curious who MasterCard sees as a direct competitor. I know you see everybody as a competitor in this space because so many walls are coming down, and you never ask a guy if he says, oh, I'm trying to date this new girl. Really? Who's your main competitor? But because this is a traditional company in some sense, entering a new space, what is the competition beside everybody for MasterCard?
Look, we don't think about it in those terms. We think about what our consumers care about and our merchants care about. They care about safety, simplicity, and choice, right? We're not here really to pick winners on, oh, you must conduct this transaction in fiat, you must do this in crypto. This is not about that. We leave those choices to individuals and businesses. What we want to do is to make sure that the network is safe, and when they have experiences, it is safe, simple, and compliant, right?
But the word you used first was merchant. So is that really the premier target, let's say, in terms of who you're going after?
They are partners. Merchants, every one of the merchants is a partner of ours. We have 90 million plus merchants around the network. Merchants are not really looking to really accept crypto directly, right? So all they are looking for is if consumers have spend power in the form of crypto, they want to be able to accept those consumers. So our cards provide a simple way to access that spend power, and merchants don't have to go through a completely different mechanism to accept crypto. All they need to do is to continue to accept crypto cards.
Balsam, I know facilitating payments is top of the agenda for FTX. In that space, where do you see the most innovation? Where do you think the most innovation needs to come?
Actually, it's not as complicated as you would think in a way. So for us, part of the move over here and part of getting regulated here is to offer the local consumer, the local customer, the same products that we offer on FTX International. And once you are regulated here, once you have a whole ecosystem being built, it becomes a little bit easier for us now, talking to banks to make it a seamless transaction where a consumer is not going through many wallets to get to be able to trade. We're talking about a direct transfer from a bank to the FTX account, and then all of a sudden he's got his money there. So and of course using companies like MasterCard or any other enablers. But once you have the regulations in play, you will have other players that come in that will help within the ecosystem. So we don't have to do it all. We're not here to replace a bank. But once those regulations are in play, then you have the banks that are willing to work with you, with the blessing of the central bank, with the rules of the central bank. So you get that, piece that is still missing. And that's what regulations does, I think. So yeah, I think that is, it is complex. I'm not trying to simplify it, but I think there is ways that you think
did a pretty good job of it, though.
But I'm just saying, that there's other players in the market that will help you within the ecosystem once they have more clarity.
I'm curious, Brian, you sitting in Abu Dhabi, I'm going broader in the market. What do you think the real opportunities are, not just for Dubai, but for this region in the blockchain space? Looking at the other markets, a lot of people are going after the same thing, but what do you think is the low-hanging fruit for this region?
I think in this region, it's very difficult to talk about the region as a whole because each jurisdiction has its own unique characteristics in some ways. I think the size and scale of Saudi versus the diversity and experimental approach that we have in the UAE, it's very hard to cover it as a whole. I think what I think there's a great appetite for in the region is one thing that binds everything together is, I guess, the need for diversification to move away from traditional sources of wealth generation for the economy and diversify into services, industry, etc. Well, it's not just petrol. There's other ancillary things associated with the industry, but to diversify and move into financial services, into other kinds of related activities, I think that is one opportunity that this region sees in the crypto space. The ability for crypto to facilitate cross-border trade, particularly as we see an ongoing de-globalization. I think is something that is worth exploring. If it is no longer possible to, for example, make payments in US dollars for certain companies or countries, there needs to be a way for such firms in such countries to be able to access payments. Assuming that this is not a sanctioned country, of course, that this is something that happens out of various choices, etc., geopolitical choices. So I see that being another potential avenue for crypto's growth here. And of course, the perennial need to transfer value across from the region back to workers' home countries, right? I think that's another area where I see there being potential for crypto. But largely, I think the diversification argument is key for having both as a means of growing the economy as a means of diversifying whatever results people may have from their savings, etc.
There was a great piece in the Financial Times a few weeks ago of a scholar arguing that the dollar has reached peak point. It just can't go any further, not in terms of like dollar versus the pound, although dollar versus the pound might keep going further, but because it's been so many places for so long and the types of geopolitical actions that we see playing out, is that really an opportunity then for crypto?
Is it a good analysis? So, I mean, that's a fundamental question. It's not clear to me what replaces the dollar at this point. When you've had previous currency transitions from the pound to the dollar, from the guilder to the pound, there were pretty clear contenders for who would be the successor. it's not clear that there's a successor here. So, I mean, from my point of view, I think it's an opportunity for crypto firms to explore, to see whether they could become such a, cryptocurrencies, digital currencies, to see whether they could become such an option. But I tend to think that the wealth and power of a nation state and its ability to use fiat accordingly will probably prevail to some extent. I mean, if you look at something like
Prevail.
China's DCEP, the digital currency thing, which is to some extent similar to what Alex is discussing, moving to a fully cashless economy, that's backed by the entire faith and trust that you have in the Chinese government. Similarly, the CBDC that you're working with, presumably the hryvnia will be backed by the full faith and trust of the Ukrainian government, right? And there's a lot of space there for governments to be able to take action.
I see Raj wants to jump in, but I think what you're saying is you don't see one eclipsing the other necessarily, but living side by side.
Yes, I tend to think that a central bank digital currencies will be a significant boost for the crypto ecosystem as a whole. For one thing, it makes on-ramping, off-ramping much simpler, potentially. They're an existential threat to stablecoins, but, that's what stablecoins exist because there is no central bank digital currency at this point. So naturally, they would be an existential threat.
Raj, I see you wanting to jump in.
Just going back to your question, you asked about regional opportunities. I think this regulatory clarity that's happening in UAE is really helping, right? So FTX getting the license, and I see many startups wanting to set up shop here because there is clarity in terms of the regulations, right? And we welcome that. And it helps us. We have a startup accelerator program. We launched a crypto-specific program called Crypto Start Path, where we engage with these companies, find product market fit, help them scale. So this is really a welcome development here. We see some of the companies wanting to move from other regions to here because of the clarity and setting up shop here. I think it's overall is a very positive thing for the region, and we will continue to engage.
How do we know there's clarity? Because we don't know exactly what the framework is yet, but obviously there are signs causing people like you to say there's clarity.
No, the fact that there is a regulatory authority that is working on the space is a welcome development. Most governments do not have that, right? The fact that there are people who can get licenses for a specific activity is welcome. And those are the things that I'm talking about. Yes, there are a lot more that could happen, and we see positive signs happening elsewhere as well. You may have seen European Parliament recently, very close to, I think, passing a MiCA regulation, which
They
is
actually
again
voted, the Committee of Economic and Currency Exchange Affairs, they voted in favor of MiCA today, as we speak.
So there you go.
So next step is voting in Parliament.
Yeah, that's what I was.
So
Go
actually,
ahead.
I just jump in there to say that it's not quite true that there is no regulatory clarity. I think that if you talk about the region, each regulator is moving there at its own speed in accordance with its own circumstances. But ADGM, we've had a framework for virtual assets since 2018. And there have been several firms that have set up in here with understanding the value that this kind of regulatory framework has offers. It's not so much that there's no regulatory clarity, it's that regulation hasn't been valued until recently. And I think that's the key difference.
Balsam, I mean, we talked a little bit about VARA, but if we just expand that, I'm curious, given your perspective, what you think the opportunities for the region are. I mean, I know it's nuanced, even within the UAE, but if we look at the region at large.
No, I mean, if we look at the region at large, I think, and I always say that, this region has always been in a position where we're following technology at some point, right? E-commerce came in beginning of 2000, and we followed suit after 10, 12 years. So we always had to play catch up. This is the first time that we look at the region as if it has a leap forward. So other areas are going to have to follow up with this region. I think it's not really far-fetched to think that within the next few years we're leading in terms of Web3, we're leading in terms of blockchain technology, and we're also leading in the case of cryptocurrencies and digital assets. There is the potential, there is the talent that is available, and there's also, of course, the the head start in terms of regulations. As Brian said, that yes, ADGM did do that 3 years ago, and now VARA is following suit. And it's going to always be evolving regulations because this is a new thing that is coming in. So I think we're way ahead of other regions, and we have everything that is required in terms of infrastructure to keep leading in that direction.
Well, Balsam Danhash, Raj, Alexander, Brian, thank you very much for joining us and giving us your perspective on the panel.